Is apartment investing the right thing to do? Is it booming? Is it busting? Where should I invest? Is it a good rental investment right now? Today, I'm going to break it all down to you with Shawn from PropSpotter. I'm your host, Tony Shah, and thanks for joining me on another episode of the Mortgage Chat. So today I have Big Shawn with me from PropSpotter. Thank you, Shawn. Thanks for coming in again, buddy.
Pleasure's mine, mate.
So I've got Shawn here because, he's looking at data everywhere. He's got information all around Australia, data points, different states, different suburbs, different locations, telling us what is happening, what's growing, what's not growing, what's going back in prices, what's going forward in prices. So I thought I'd bring you in, right? And the reason why I brought you in, mate, is because I'm seeing a lot of people asking, hey, is investing in apartments the right thing to do? Hey, good rental income. Hey, it's going to be good growth. Hey, we've got a shortage of supply. Is now the right time to go? Because there's always going to be a demand for these apartments because we don't have enough supply. We've got so much demand. That's what we're seeing right now, aren't we?
Exactly. As with anything, ladies and gentlemen, do your own research. But the general principle when it comes to apartments is that you need something with a very undersupply of land, right? So you want to be buying apartments where there is no land around the area and they're completely landlocked. Think of suburbs like Bondi. Think of suburbs like St. Kilda in Melbourne and a few others across the country. But even then, you've got to dive even further because you need to avoid high rises. You need to check your strata, and there's a lot of complexities when it comes to apartments.
Yeah, look, I wouldn't say all apartments are the worst investments, but a lot is, right? I would say, mate, 99% of them are dog shit out there. Okay? But look, by saying that is, I've got to take that one step back, Shawn. Okay? Yes, they're probably not the best investment. Sometimes people just have to buy an apartment to live in an apartment for affordability purposes or for lifestyle purposes, right? Because they want to live closer to the city. They'd rather spend 800 grand closer to the city or $1 million closer to the city, buy a 2 or 3 bedroom apartment than living an hour and a half away. Right? So it becomes a lifestyle thing. Okay?
Yeah,
but
if it's a PPOR, sorry, Tony, but if it's a PPOR and it's a lifestyle choice, just understand it. Yeah. And if you still want to do it, go for it. But there is a cost attached to it.
Exactly.
If it's an investment, whole different kettle of fish.
Right. Today, we are only talking about the investment side of things, if it's a good investment, okay? Buying it as an owner-occupier, complete different ball game, all right? So purely, I just want to talk about, hey, do you know what? Is it worth buying an apartment as an investment? Okay, so I'll say it again. 99% of the apartments out there are dog shit, okay? The only ones that I've seen grown is like what you just said, right? The beaches, DY, Bondi, Manly, Collaroy, right? Maybe Chatswood area, maybe. But if you do that in comparison to Penrith, Blacktown, Parramatta, where else?
Ryde.
What about Macquarie Park, right?
Macquarie Park, yeah.
Okay, that's just New South Wales, by the way. Okay,
Southbank in Melbourne.
There we go,
guys.
Right?
Where Docklands in Melbourne, where apartments in 2010 are selling for the same price that they are today, 15 years later.
Yeah. And I'm going to give a few examples of why they were not great investments. Okay, and some of these are family, all right? That's purchased apartments that became pretty shit investments, right? So, Shawn, let's you start off. What about you tell us why are apartments not the best investments and why are they not growing in value?
Yeah, so I think the first and biggest one is really strata, right? So whenever you're looking at buying an investment, grab the strata plan, make sure you understand it inside and out, have an expert look over it. There are a few available online that will digest the strata reports for you historically and even present. But what you really need to understand is A, what are the strata costs today? B, what were they 2 years ago? And C, what are they going to be like 2 years from now? Mm-hmm. If there's a lift repair on the horizon, if there is a roof leak already happening that needs to be rectified, those are all going to come out of your pocket through the strata fees.
Yep. I mean, strata is one of them, right? So what about supply, right?
Yep. So once you've looked at the strata, the second thing that you need to look at is the overarching land supply in the area you're about to buy in. Is there lots of vacant land around this apartment? Is there a massive price difference between a house and an apartment? If the answers to both of those questions are no, there is plenty of land available, nearby and the price gap between a house and an apartment is relatively small, do further research. Understand whether you actually can see the prices of these apartments going up. Look at what the prices were 2 or 5 years ago and look at the prices today. Because it's quite likely that in most of these cases, the apartments only jumped up 2-3%, over a 5-year period, which is very, very fractional compared to houses.
Yeah. I mean, do you still see value in apartments where maybe it's only a block of 4?
Again, depends where the block of 4 is, because if you could have a block of 4 in Parramatta,
Yep.
right, against a block of 4 in Bondi.
Yep.
Now, those are two very different things.
Yep.
No doubt land has appreciated in Parramatta, but again, if it's a 500 square meter block divided by 4 units, that's 100 square meters each person, compared to 500 square meters in Bondi divided by 4.
Yep.
Right? You're going to get way more gains in Bondi.
Sure.
Yes, the lesser units, the better
Yep.
as an overarching principle, but it depends once again on where the land is situated.
Yep. And also, if you're going to see a lot of apartments being built around the area, right? Obviously, there's going to be a lot of supply, right? A lot to choose from, right? So therefore, that's another reason why a lot of these apartments don't grow in value. Okay, let's talk about Parramatta. Right, a lot of apartment prices hasn't increased the last maybe 4, 5, even 6, 7 years.
10 years.
Call it 10 years.
10
right?
years.
10 years, right? And why? Because there's so much being built at the one time.
There's new supply coming online.
Yep.
There is a lot to choose from.
Yep.
And there isn't that much demand for Parramatta apartments.
Yep.
Right? So the people who buy them end up living in them for a bit and then renting them out. Over time, they realize, wow, it's costing me so much to hold this apartment and I'm not getting much of the price gains.
Correct.
It's time to sell.
Correct. And a lot of people that buy an apartment don't realize that the strata costs actually eats up a lot of your rental yield.
100%.
A lot.
And also, one thing you've got to realize is when you own a house, you are in control of the walls of the house. You're in control of everything that happens, right? If there's a roof leak, you get to decide whether you want to fix it, how much you want to spend to fix it.
Yep.
But in an apartment, you don't get that same choice.
Yep.
Right? Even if you're the chair of the strata committee, you still have to convince the entire strata committee to approve or ratify a decision. And those things are outside of your control.
Yeah, sure. So, Shawn, if I was to say, hey, do you know what, Shawn, I found an apartment in Blacktown, 2 better, for $500,000, and I go to you, but the rental yield's, quite good, 5%, so 500 grand at 5% rental yield.
25 grand a year.
What would you say?
25 grand a year, but the reality is, what are you forking out for? You're probably forking out 2 grand a quarter for strata fees. So suddenly you become 25 minus 8.
Yep.
Right? So at 25 minus 8, what are you at now? You're at a 3% yield.
Yep.
Or 3.5% yield.
That's gross, by the way, isn't it? Not yield. Not.
You haven't accounted for your mortgage. You haven't accounted for anything else.
That's correct.
And the second question I'd ask you is, how much do you see rents growing in these apartments in the next 5 to 10 years? And if your answer is not much, then I'd ask you to seriously reconsider your decision.
Yep, especially with no growth.
That's right.
So in other words, you could have reallocated that $500,000 of debt in another property in another state. That's Torrance title. What I mean by that is a house. Still probably get the same rental yield, 5%. Yep. Maybe a little bit higher if you're lucky, if you're chasing the yield game. Okay. And you're probably going to have less headaches. Probably have the potential to grow more because you got the land value there because it's a house, right?
Correct.
No strata. And so that's why some people that want to invest in Sydney, for example, first-time investors, they don't look outside of Sydney or New South Wales because for reasons that they're scared, right? Especially, we come from ethnic backgrounds. Don't know if you can see, all right? My last name is Shah, and Shawn is, what are you, Shawn?
Singh.
Right, so you know we're not white, okay? Our parents are quite old school, I would say, back in the days, where they don't like to look outside Sydney. Sydney was king. It was king. It still is king. Right, but now the investment dynamics has changed quite a fair bit, right? Where apartments, they cost too much to hold, doesn't grow in value. They don't understand that, right? Because they don't see outside other states like what? Townsville, Queensland,
Melbourne.
Perth, Melbourne.
I mean, let's just say, sorry, if you're thinking about buying a $500,000 or $600,000 apartment in Sydney, ladies and gentlemen, there are full-blown houses in Melbourne's metropolitan area under 45 minutes to the CBD by public transport that are selling today for under $600,000.
Yes, that's right. What's that suburb that you showed me the other week? The other day, is it Whittington?
No, Whittington's in Geelong.
Geelong. Sorry, I mean Geelong.
Yeah, yeah.
Geelong,
There's
right?
Whittington in Geelong. There's Corio in Geelong.
Yep.
But like even in Melbourne proper, there's suburbs like Werribee.
Yep.
There's suburbs like Dallas. There's suburbs like Sunbury, where as of today, and we're speaking October 2025, you can still buy a full house on over 450 square meters of land for under $600,000.
So what's the yield on that?
4%, 4.5%.
Right. It still be very relatively same if you're to buy something in Sydney, an apartment.
Yes, but you won't have to deal with the headaches of strata.
Exactly.
You won't have to deal with
Exactly.
any of the lack of capital growth. You'll still have a full swing of capital growth. And you know what? Melbourne is in the beginning of its rebound.
Yep. All right, 100%. Right. So that's what I say to a lot of people that want to invest in apartments, not just Sydney, but anywhere, right? Sydney, Melbourne, Perth, right? Queensland, anywhere. Same metrics at the back end. That's probably why the price is not driving. The same thing you have to look out for, right?
Correct.
So I'm going to give you a good example of what I've seen with apartments the last 10 years, right? So I've been in the game for 10 years. So I've seen what's going on. I've seen the valuations. I've seen where investing in apartments has actually went backwards for some clients, right? So I'm going to use a family member as an example. They may or may not be listening here. They purchased an apartment around Homebush West back around 2012.
Yep.
2012. They purchased it as a first home, two better. It cost them, I think it was 420 back then. Okay, so what? 2012, so now 13 years ago. I remember I looked after the finances about 5 years ago. I restructured the loan. The valuation actually came back at 600, which is quite good. Which is quite good for Homebush, right? So from 420 up to 600, so 180 grand gains.
Yep.
Okay. From that year onwards, when I kept on doing a reval, the valuation hasn't changed.
Yeah. And
It has not changed.
that's 2020 to the present.
It has not
right. So
changed.
2020 to present, some Sydney properties have done
Yeah.
50%, 60%.
Yeah, right. And they just sold it for 620.
Wow.
Right.
Yeah.
So from, call it 2012 to now 13 years, 420 to 620, they've only made 200 grand profit. I actually told them to go, hey, mate, you should be selling this property right now. Back in 2022, 2023, I go to them, mate, you should be selling this property right now. You should be reloading that debt into Townsville. I told them before Townsville even boomed. If they reloaded that debt and bought something for low 400s, that Townsville property will probably be worth around mid-sixes right now.
Yeah.
Mid-sixes, better rental yield.
Without a doubt. Without a doubt. And, like on another spectrum, my wife purchased an apartment.
Oh, here we go.
Thankfully,
Here we go.
before she met me.
Here we go.
Right? In Kellyville Ridge for $490,000 back in 2017.
Kellyville Ridge, 490.
Yep. Right? So it's a one bedroom.
Or one
Bedroom,
as
one
well.
bathroom,
490, one better.
car spot from memory. Well, one or two car spots.
So
can't
for
remember.
people that know the Hills area or etc., whereabouts in Kellyville Ridge was it?
It's just off Old Windsor Road, right behind the McDonald's and opposite the famous Edamoga pub.
Right, okay, so it's not far from the metro then.
It's a 15-minute walk to the
15-minute
metro.
walk,
Yeah,
right?
yeah.
These days, not that long,
Yeah.
right? 15 minutes long, right? I'll let you keep going
Yep,
before I even
so-
jump in.
$490,000. Beautiful apartment, don't get me wrong, right? But what ended up happening was we moved out. We moved to Bondi. And then that apartment was no longer a lifestyle choice. It turned into an investment property. We had tenants paying us anywhere. We had a range of tenants in the next 3 or 4 years that we owned it, $400 to $440 a week. But our strata bill went from $6,000 a year to $21,000 a year
21?
as they raised a special levy to replace the cladding. 2 years into that special levy, the cladding levy, obviously through COVID, the price of construction materials went up. And so the quote that we got in 2019 for $980,000 now became $2.8 million.
Be serious.
And obviously we hadn't accepted the quote. So we were stuck in this rut where we had to raise even more money in
Yep.
the following years. It was at that point that we decided we wanted out.
Yep.
We placed the property on the market and we sold it for $435,000.
435. So what, 490 to 435?
So we took a $55,000 loss.
Not including agent fees.
Not including agent fees, not including the strata that we paid, not including the negative gearing that we did during that time, and we lost money.
So really, you could have lost around what, more than fucking
100 grand?
G's.
Yeah, I think overall, if I was to place a number on it, it'd probably be 100, 110 grand.
A lot of people don't understand when you buy an apartment, strata costs can keep on going up.
And they're outside of your control.
I know, they're
guys.
actually outside of your control.
Ladies and gentlemen.
Right? Keeps going up. And also, they don't know there may be a special levy. They don't understand there will be a special levy sooner or later when the apartment gets old, needs repairs, and they have to raise money from it. So your strata could go from 600 to 1,000, but also it can have a special levy on top of that as well.
Yeah. And, you know, if you have those fancy apartment buildings that have a concierge, that have a swimming pool, that have tennis courts, all of those things need maintenance, right? So if the swimming pool's water needs replacing, who's got to pay for that?
Yeah.
It ends up being you.
So obviously you bought this apartment before the metro came up.
That's right.
Right, that's right.
And
So
we sold it after the metro had come up.
Right, so you would think, hey, the apartment should have increased in value, right? Because the metrics came up, which is bullshit. Right? So that's why a lot of your project builders out there try to sell you the dream. Thinking, hey, dude, the metrics coming up. Oh, it's going to boom in price. Mate, tell them to get fucked, all right? And past Kellyville, Rich, where your wife is, next to the Era, we call it the Era, by the way. Right, I didn't go there. It's called the Era Mega.
Sounds like you have, mate.
Right, or the Fids, right?
Yep.
Anyways, so yeah, right next to the Era Mega. So 15-minute walk to
Russell Town Centre and all the shops.
Right, all the shops. You got the metro.
For 40 minutes into the city.
Yeah, right. Not far drive to Castle Hill, by the way.
No.
15?
Yeah.
15 minutes?
Thereabouts.
Not far drive to Parramatta.
Straight down Old Windsor Road, probably 20, 25 minutes, tops.
Not far drive to Blacktown.
Nope, 15 minutes.
Right, so that apartment had all these amenities around it, and the metro, and nice shops, and it didn't grow in value.
Because it was nothing in comparison to the houses that were there.
Exactly. Right? Exactly. So I actually said to one of my clients that exactly the same thing. I go to him, hey, mate, you should be selling that apartment because it hasn't grown in value the last 2-3 years. Like, take your profits and pay down your own occupied property and reload it to another investment that has the potential to grow. And he goes to me, Tony, look, the metro is coming around. I think they're at Canterbury, somewhere like that. Oh, the metro is coming around, you know, it's going to grow in value. Oh, yeah, I'm just hoping it'll grow in value. And I gave him the same scenario what we just spoke about. I go, mate, it's not going to grow in value. Especially Canterbury. There's so many apartments there. And I said to him, I think you're just wishing for hope. That's what you're hoping for. Wishing for hope.
Yeah. It was just coming back to Kellyville Ridge, it was a very, very tough time for us to make a very difficult call to sell a property at a loss.
Yeah.
Right? I think you need a special sort of mindset to be able to do it.
I think no one wants to.
A lot of people don't want to. You spoke about our parents. I think our parents would struggle to.
Yeah,
right? And even we even today in 2025 struggle to. But the reality is, after that loss, we took a break for a year.
Yep.
And we went back in a year later and bought a house in Frankston North for $625,000.
But you bought other shit before that, right?
I bought other shit before that, but from selling that property,
Yep.
I said, we're not going to let this drag us back. How do we move it forward?
Yep.
Right? And get up quickly.
Yep.
And less than 12 months later, we were back in Melbourne, in a metro house for $625,000, which has now appreciated in the last 12 months alone.
Yep. And you bought something else after that, a few months after that, Frankston. Now, we're not going to talk about that. That's a video for another day.
For another day.
That's a video. That's a juicy one, by the way. Okay. So, so that's what I said, right? Mate, you're just wishing for hope.
Yeah.
The metro is going to come. Yes, it's going to make life easier. It's going to make
it's going to make it more convenient.
But it's not going to grow a lot in value when there's a shitload of apartments around the area.
Yes, or the price between the house and the apartments are $200,000 more, $300,000 more, $500,000 more.
Yep.
Right? People are going to beg, borrow, and steal to get themselves into a house with land, as opposed to a high-rise apartment.
Yep. And that's what I say, everybody. When you're not really experienced in investing or where to look at, and you're all about Sydney, you're all about Melbourne, you're about Brizzy, because you've lived there all your life, start looking at a few videos, start reading up on a few things, and try to look outside of your region and get out of your comfort zone, because that's where people make the money, when they look outside their comfort zone.
110%.
Right? You know, don't let these project managers, I think they're called project sales or project managers, what do they call? Whatever you want to call it.
Property strategists sometimes.
Right. They sell these off the plan apartments and all that, trying to sell their dream.
And they tell you about the high yields.
Yep.
And the low strata fees.
They tell you the high
on an
yields,
unbuilt apartment.
High yields, sell you the dream, but then tell you the cost of holding an apartment. Okay.
Sure.
So if you're a first time investor and you're looking to buy an apartment as an investment, please reconsider 500 times before buying an apartment. Because I can guarantee you, if you're buying that apartment, hoping that will grow in value, hoping you can leverage off it, hoping you can sell off it because it's going to grow in value in the next 2-3 years, so you can buy another bigger property or you can buy more properties, I can guarantee you, you'll be struggling. What I say to a lot of people is, at times, even at times when they want to buy an apartment to live in, sometimes it's cheaper to rent an apartment than buy an apartment.
For a lot of cases, definitely.
Right? And I said to him, mate, I can guarantee you, if you buy an apartment in, call it Parramatta or Blacktown, okay, in comparison to someone that rents an apartment in Blacktown and invests in other states, if you go on a 5-year time frame in future, I can guarantee you, the apartment in Parramatta, for example, will be very similar price. But a guy that's renting the apartment and buying somewhere else, their property over, call it Townsville. Let's call it Townsville as an example because some of our clients did invest in Townsville. They bought something for low 4s, sold at high 6s, and guess what? They came back and they bought something way better than an apartment because they had that massive deposit. They actually ended up buying a townhouse.
And in that time, their wages would have increased, so they could have afforded even more. So,
exactly.
In conclusion, right, I think if you're looking at an apartment, like Tony said, do your research 500 times over and ensure everything stacks up.
So, guys, there you have it. Thanks for joining me on another episode of The Mortgage Chat. And Shawn, thanks for joining me and giving me your insights. As always, please watch out for future videos, especially Shawn's data-driven videos, because it's going to give you a lot of juicy suburbs, a lot of juicy data, where to invest next, what's coming up, what's going to increase in value, and where are people slowly diverting to. And even for me, right? So we are going to tell you where people are slowly diverting, okay? And I can tell you right now, we are slowly seeing people diverting away from Melbourne itself, right? Melbourne's still going to be a hot market for what, call it the next 12 to 18 months. Yeah.
But people are already picking the next one.
Yep, but people are already picking the next one. So what we try to do is we try to tell you, show you, the investors, where to look for the next swap spot that's going to be the next hot spot.
Ain't that the truth?
Right, and that's where you're going to get the growth and the yield. Thanks for joining me, and I will see you next time. Thanks, Shawn.
Pleasure.